All right. Hey, good morning, everybody. Chris Franks with Texas West Capital coming at you live a few minutes after 11 a.m. Central Standard Time here on Tuesday, January 24th, 2023 from a very wet, very noisy Lake Conroe, Texas area, just north of Houston, Texas. So good to have you guys checking in. If you hear any loud thunder or you happen to see me jump when it happens, try not to laugh too much. I'll try not to entertain in that way. But man, oh man, getting kind of crazy out there. But man, I guess it's crazier just about an hour south of us toward the hour and a half south of us toward the coast where they're really getting popped over there, right? Hey guys, listen. Right now you can still get Tier 3 1 month. No auto renew, guys. You don't have to remember to cancel anything like that. Come in, soak up as much as you possibly can, and then if you want to leave, feel free to leave, man. But if you stick around, we'll go ahead and offer you a pretty great deal. No hard sales. It's just going to be like, hey, listen, if you want to stick around, you can take advantage of this. If not, hey, hopefully you got a lot out of this. But, you know, again, guys, I'm on that mission this year to help 10,000 traders become more consistently profitable, and this is the first step in that. You can get that right there at howtotradetowin.com/T3, okay? Other than that, if you really, really, really are serious about learning, guys, if you want to just take just what you know about trading just like to this incredible level, if you want to learn more in the next year than you could possibly really expect to learn in the next 5 to 10 years, you can do that with us through our mentor program, all right? And I'll tell you what, we still have a discount going on it. You just scroll down the screen here. Come on, just keep on going through all the way down there. We do have different financing options here. Okay, if you're in the U.S., you can use this link right here, and they'll actually give you pretty competitive loans. It's like a loan like you would get for anything else, right? Except in this case, you're not buying something that's going to lose value over time. You're actually buying something that's going to give you the potential for a better life, right? You're not buying a car that the minute you drive it off the lot, it loses 40% of its value. You're not buying a house, Lord knows right now, where it's dropping in value, right? You're buying something that's going to create skills, that's going to create understanding where you can produce. I mentioned this recently, guys. Life itself is about offense. If you are playing defense your entire life, which most people are, no wonder you're upset. No wonder you're frustrated because you're continually falling behind. Standing still is falling behind, guys. The world continues moving without you. So we're offering this incredible thing right here. And I'll tell you what, I'll do one better here. The first 2 people that get a hold of me, contact me on Twitter, contact me on, Christopher.inks@TexasWestCapital.com email, contact me on our Discord server, whatever it takes. The first 2 people that do it, I'll let you in at $29.99, guys. So that's basically 70% off. Just because I'm trying to, again, help you guys get out there. If you want to know if this is worth it, guys, just ask. I think we've got some members sitting here in the, by the way, you can get that link right here, howtotradetowin.com/LMT. I think we've got some members probably in the chat at the moment, and you can just ask, is it worth it? They'll tell you what they think. And so you can get on this page. It tells you what all you're going to get in there. Whole bunch of stuff, guys, including my day trading system that I use, which I just let them know today that I've actually been working on an even simpler way to implement it. And in the next week or so, we should be training them on that. And it's just going to make it so much easier, guys. It's all about, man, you know what? And why is it a year? It's not that you need a year, guys, to learn the things that are in there. But when you change your mindset, it takes time. If you're coming into trading right now, I can all but guarantee you have to change your mindset. You are coming from most likely a broke, poor, a middle class mindset, and you have to change the way you look at the world. You have to change the way you look at the markets in order to be consistently successful, consistently profitable. You cannot, and don't think that, oh, well, I look at it this way in my life, and when I get to trading, I can do something different. You can't, guys. You can't. There's no 2 ways about it. You've got to actually change it. And when you do, the great thing about it is not only does your trading get better and more successful, but the rest of your life does too. Work, your job, if you own a business, your business, your relationships, your family life, it all gets better. But the problem is everybody gets out here, guys. Let me tell you real quick before we jump into this. The problem with most of what you find online is everybody wants to teach you a system of something, right? Any monkey can learn a system. I'm telling you guys that right now. Sorry, I've got the monkey in my head because somebody posted something the other day about monkeys typing in tickers. But anyway, anybody can learn a system, right? It's that other stuff, the more important stuff, the way you view the world. How do you change your mindset? That is what determines whether you're going to be successful as a trader or not. Period. End of sentence. Argue with me all day long, all you want. I know. I've been there. That was where I was when I first started. I had to learn and work my way through it without anybody helping me. Try and figure it out on my own. And now you get to get the benefit of my 25 years or 27 years now of going through all that. You can get that condensed in a much shorter time frame. But the year is to help you move through that and stay through that till it becomes a habit to where you don't have to think about it. And then, of course, we go through everything else and you get all the freebies in there, whatever. But anyway, man, we would absolutely love to have you. Like I said, first 2 people, that's it. Only the first 2 people come at me and say, hey, listen, I want to do it, whatever. We'll get you in at $29.99. We accept, credit cards. We accept PayPal. We accept, I don't even know what, crypto, Bitcoin we accept. And then, of course, you can do the financing there as well, okay? So, there we go. Let me see here. By the way, guys, if you are on Facebook, man, check me out over there. Let me see here. I'm gonna write this up here. We are doing a huge push this year to other platforms that we're not normally on. Okay? Facebook is one of those. There's a whole bunch of people that I've never really ever been able to reach over there because we haven't really made it like this serious kind of thing, right? That's all changing this year. You guys are going to see me everywhere. You can follow me over there at facebook.com/Christopher Inks Live. And you can keep up with everything we're doing at Texas West Capital, as well as the other verticals that we're moving into and we're going to be integrating throughout this next year. So I told you guys, there's going to be a big, huge expansion this year. We're putting a lot of money into marketing. And just doing that thing I haven't really done a whole lot of over the last 5.5 years. And we've still done like stupid, crazy greatness. But man, it's not been right for me to do that to you by not getting out there and letting more people know about it. So that's our plan for this year, guys, right? No. $2,999, Kimazabi, for the LMT mentor program. The first 2 people that come to me for it, right? $19.99 is the tier 3. You can get tier 3 for 1 month for $19.99 through howtotradeTowin.com/T3. It's the only place you can do it. And once that comes down, it's down, guys. So I mean, if you got $20 and you want to get months, years ahead of where you're at, come in here, be serious and ready to learn, go through all the educational stuff, attend the 3 times a week trainings that we have, live stream trainings that we have, do all that. Okay? Hey, Michael, you said like on Facebook. I appreciate it, man. Who all's here already? Let me kind of check in with you guys. Bamboo, what's up, man? Love to see you checking as always. Corey, good to see you, buddy. Fibaswani checking in. By the way, in case you guys don't know, Fibaswani is now with us over there at Texas West Capital. And we will soon be opening up his channels in there as well. And you guys will be able to get a hold of that. You'll be able to do it separately. Or if you're already a member of Texas West Capital, you'll be able to grab a discount jumping on his specific stuff. If you guys have paid any attention, he and I often have similar targets. But, whereas I give like longer term targets as well as try to keep up with the more day-to-day trading. His particular system he uses is more of the swing trading. So some of you guys that maybe don't have the time to day trade all day long, that might be an added plus on there. So we'll let you know as soon as that's up and live, guys, on there. Who else is here already? Your new home, TWC. I love it. Jeffrey McDonald. Good to see you, buddy, checking in. Michael, what's up, man? He says, seems weird the DXY plummeted and closed below the H4 the 4-hour there pivot, but markets didn't react. Yeah, we'll talk about that in a minute. That's one of my big things I want to talk about today. Yeah. Andrew, what's going on there? Nevlusian checking in. Mark, what's up? Let me see here. Data's here. What else we got going on here? The Real Go-Go. What's up, man? I always love reading your name there. It makes me smile. The Real Go-Go. Eriquin says it's crazy how weather works. Beautiful day here in Florida. Yeah. Usually, this is Southeast Texas. So, it's the dead of winter. And we've been at, 70 degrees here for the last few weeks after it was down to 15 degrees. For those of you over there on the other side of the world, talking in Celsius, I don't know. What is it? It's like subtract 32 or something and then divide by something. Divide by 2, I think, or something like that. Man, you know what? I'm here in America, man. We don't use that, so it's hard to keep up with it. Thankfully, there's Google, though. You can type it right in, right? Let me see here. Vibaswani suggests reading the book Can't Hurt Me. He says it's good for mental strength. He says he's reading that right now. Corey says the mentor program that we have over here is priceless. Love that, man. I appreciate that. Thank you. Andrew agrees that Tier 3 is great. Baltazar, what's up, man? Baltazar was my first like over there on Facebook this morning when I put it out there. Dennis, what's up, buddy? Good to see you checking in. Anybody else in here now? Let me see. Jay Andrews, what's up? Randy Jarvis is here. Blaze, what's up, bud? So yeah. What is it in Fahrenheit? So in Fahrenheit, Fahrenheit over here, it is, like I said, we were in the 70 degrees over here last couple of weeks. Dead of winter, right? Middle of January. Those of you who might not know, man, Texas had a huge freeze thing back 2 years ago, and it almost shut down the grid. We were apparently 4.5 minutes from the grid shutting down. And had the grid shut down, it would have taken a month and a half. Because Texas has its own electric grid. The rest of the, U.S. has to fight over theirs. Texas has got its own. But anyway, yeah, so almost shut down. Those were good times. Not really. 21 degrees. Mark says, sweet Lord. NJ Wave Rider, Helder, what's going on? Helder, yeah, long time no speak, man. Still bald, huh? Yeah, me too. All right, guys. Hey, listen. So, as we get in here, you've seen on here, this is the CME Fed Watch tool, right? And this is basically the market, putting its money where its mouth is and betting on the odds, the probability of specific rate hikes, right? And so, our next rate hike is going to come next week, February 1st. And as you can see here, 98.1% probability that we get just a 25 basis point rate hike. Why is that important? Because we've had 75 from the summer into toward the end of the year. And then the last month of the year, December, we had 50. And now we're looking at 25. It's quick deceleration, right? This is what I've talked to you guys about as we saw, CPI dropping off, as we saw PCE-PI dropping off, as we saw all this stuff happening in the economy. Again, at the beginning, a year ago, January of last year, you guys will remember, I said, listen, I see that we're going to top out. My thought was that we were going to top out with inflation toward the end of Q2, possibly into Q3, the beginning of Q3. So basically right around summer. But looking at the end of Q2, right? I said the housing market should top out around then. I said the Fed should start pumping up them interest rates. It'll hit a frenzy in the summer. I said we should get 75 basis points for a few months, potentially 100% or 100 basis points, but at least 75, right? And then I said, and this is all in January of last year, and I said, but I expected by the end of Q3, the beginning of Q4, so around October, that we would see a pullback to 50 basis points. Now, I was correct on all of that except for the aggressiveness of the Fed, who's, kind of doesn't want to be caught, doesn't want to deal with the flack that it got with being late to the party with raising interest rates, right? So they continued on. A couple more months, all right? So it was October, November, and then, like I said, in December we hit, right? Now, part of my whole thing that I said last January was the fact that by this January I was expecting us to be down. I was looking at, okay, we top out at 75, there at the end of Q3, and then we have a couple of months of 50, and then we have 25 by the time January hits, January, February, right? The first rate hike of the year. And so that's where we're at. So, I got everything correct except We held on to 75 basis points a little bit longer than expected, but we're still at the 25 in the January, February area, the beginning of the year, the first rate hike coming into the year. So why is this important? Because everybody and their grandmother online keeps saying, oh my gosh, the Fed's going to do this and that because they were so sure. They were clear about what they were going to do. Guys, I keep telling you this. The Fed's always clear about what it does. And if you've been following me for years here, I've constantly shown you where they were wrong, right? Again, if we think back to when quantitative tightening started, right? And it was in that year. Remember, that started in the November, right, of that year. And I had mentioned there in April, I said, no, because at the time the Fed was like, oh yeah, no, we're not going to start tightening until maybe last half of 2023, or 2022, I'm sorry. We wouldn't even start raising interest rates until 2023, at least, probably 2024. And I said, no, I said, I bet you they start doing quantitative tightening by November. And they start raising them interest rates there at the beginning of 2022 there, right? What happened? That's what happened, right? And we can keep going back. Those of you guys, again, those few of you that have been following me for years and years and years here know that I'm pretty spot on with this stuff, right? So here we are again. Now, why is it important? Because everybody and their grandmothers out there arguing about pivots, and nobody's paying attention to deceleration, right? So deceleration happens, the markets respond. Remember, markets are forward-looking, right? And so these people that are looking for pivots are completely missing the game, right? They're missing all this opportunity to make all this money, right? And if you talk to people about that, their time frames continue getting bigger and bigger, right? First, they're on the daily. And then it goes and does something different, right? Price starts rallying, right? They're like, oh, but still the trend on the weekly. Oh, but still the trend on the monthly, right? And they keep going bigger and bigger because they're trying to convince themselves, they're trying to save face, they're trying to look like they're right rather than being profitable. I always ask you guys, would you rather be profitable or right? And what that means is, if you'd rather be right, then no matter what's going on, you're going to keep changing your goalposts. You're going to keep changing your time frames, right? But if you want to be profitable, it means, hey, listen, I'm okay with what I think is going to happen, but I am going to be quick to change if things are different. If new information comes in and things are different, I'm going to change what I'm saying because I want to make money. I don't care about some Yahoo online and what they think about me. You guys really need to get that down. I've seen some of the stupidest stuff online. Often, social media can be such a cesspool. It brings out the worst in people, right? They come out and they think just because they can say something that they should, right? But I come from a time when my mama taught me that if you don't have something nice to say, don't say anything at all. Seems like this whole last few generations completely missed that. And social media makes it easy. You hide behind fake names and fake pictures, and you go there and you talk all the smack you want. The problem is, people like me, professionals that do this, we're not swayed by you. Your silliness. We sit there, we feel bad for you. That whatever's going on in your life is so bad that you feel the need to act in such a way. It's awful. Life can be so much better. And all you have to do is choose to make it so. And then do the things you have to do, right? It's not going to happen on its own, guys. It's not going to happen on its own. So, if you're still, guys, if you're out here talking with me and listening to me or whatever, and you notice that you really care for whatever reason, what some idiot online thinks, I could be that idiot. You shouldn't care what I think, right? Shouldn't care what anybody thinks, but especially if they're rude and disrespectful and just general, poop stain on the world, right? Got to choose my words carefully here. Be nice. If people are choosing to be like that, you really have to figure out in yourself, why do you care? Because as long as you care about that nonsense and it affects you in a negative way, it's going to make trading difficult. It's going to force you mentally to try and be more right than profitable. You guys see the problem with that? Don't put yourself in that situation. You're worth more than what some idiot that just comes up to talk, crap says. They're not worth it. The problem with today's world is people can get out there and talk smack and not get hit in the mouth. See, I grew up in a time when we didn't have all this social media, and if you were going to say something, you had to say it to somebody's face. Because the only other way it's getting to them is if you're talking to somebody else behind their back, and then it's getting to them. And either way, you're getting popped in the face, right? You're getting popped in the mouth. Now, I'm not saying that's that the world needs everybody to hit everybody, but what I'm saying is people who don't understand that they have no respect for other people around them. It was almost forced respect, right? You had to think to yourself, is this worth getting hit in the mouth about? Some people still did. Some people got hit in the mouth. But anyway, it is what it is, guys. Again, you have the biggest part of trading is not the system. It's the mental side of it. It's the emotional side of it. I always tell you, trading is simple. It's not easy. It's simple. Price basically moves through areas of liquidity. It moves through supply and demand structures. It moves through resistance and support. It is that simple. But are you disciplined and consistent enough to stick to a trading plan? Are you able to trade without those emotions, or are you able to keep them in check? Are you able to be disciplined and consistent about your proper risk management, or are you emotional YOLO, I want to get rich yesterday? Most people are that I want to be YOLO, get rich yesterday thing. And that's why you lose your money. It's not that Wall Street's stealing from you. It's not that some crypto whale is stealing from you. It's because you are putting yourself in a bad situation. You are taking yourself and standing on a train track, knowing that a train is coming. And you're standing there anyway. That's on you. That's not on anybody else. Does that make sense, guys? Yes, don't be an asshole on Twitter. Yeah. Name Mr. Wolfs, what's up, man? People should be responsible for their own mistakes. Today's blame culture is real pain. It really is, guys. It really is. And again, I've gone through this before. The idea of being responsible means that even if you're walking down the street and somebody's driving their car and you're on the sidewalk and they pop the curb and hit you, yes, that's their fault for hitting you, right? That's their fault whether they meant to or not for getting there, right? But you have a responsibility for that as well. Because the decisions that you made that led up to that point put you on that sidewalk at that time. Now, that doesn't mean that all of a sudden it's just all your fault, not their fault. No, they have their blame and they're part of that. Why is this important? It's important that you recognize this, because if you do, then you start seeing, okay, well, I'm going to make a lot of bad decisions in life. I can't possibly make 100% good decisions all the time. So I can forgive myself for my mistakes and then do better. See, the problem with most people is they get to this point, they make a mistake, they make a bad choice, they make a bad decision, whatever, and then they sit on it. They never get up beyond it. They sit there and they mull and they stew over it. They never move beyond. If you can say, okay, yes, I made that mistake. It's what makes me human. Now I need to move beyond it. Yeah, I'll have to pay whatever price I have to pay, but I've acknowledged that I made this mistake. Now, since I've acknowledged it, now I can actually go and do something about it. I can change my behavior. I can change my decision process that led to that, which means I become better. If you don't become better, what the hell are you doing? If you're just living life, just sitting there, life is going to pass you by. Life continues to go. Progress continues. You absolutely have to continue pushing forward. You have to be offensive in life. You have to play offense in life, in the markets, in everything you do. If you're playing defense, the best you can hope for is to fall behind. The best you can hope for is to fall behind. Okay? Let me see here. Deadly, what's up, man? He says, I'm completely responsible for any gains and any loss that my portfolio suffers. I have full control over every trade that I enter. I can't control what the market does, but how I handle myself as the market prints. Exactly. Exactly, guys. That's the other thing. A lot of times traders will spend too much time worrying about things they have no control over. So, I posted a poll there on Twitter not too long ago, and I said, okay, well, how many people are out right now? And if you're out, why are you out? Is it because you're unsure of the larger trend? Whatever, blah, blah. Over 50% of the people said they were out of the market as it was rallying because of the larger trend, because they were unsure because the larger trend was still down. If you're a trader, who cares about the larger trend? There's so much money to have been made, right? So we jump over here. And let me see if I can find a good chart here for Bitcoin. Let me look right here, right? It's kind of what we're looking at here, right? Look at this, guys. Look at this. Let me take this off here. Look at this. What the hell are you doing not being in this? At least. Right? Look at this. This is the low here. Why are you not in this from down here? Why weren't you in this to at least this? And when we got 5 waves up and 3 waves back, why weren't you long at least to get a breakout above here? At least. And if you listen to me, I told you before that ever happened that once we broke here, we were going to move up as quickly as this moved down. We were going to move up like that. And we did up until this area. So you should have been long to there. Guess what, guys? We went sideways here. We broke out again. Why didn't you get long to here? Why are you worried about the overall trend here being down? Guys, we went sideways here from the June low 5 months. And then we went sideways for another 2 months. This is 7 months of what appears to be accumulation. But so many people are scared because the big accounts on there. By the way, most of these big accounts are now like, oh yeah, so bullish now, right? And maybe they are. But they became bullish here. They became bullish here. You still missed from 15.5 to 20,000. I mean, you still missed 30% rally here, which becomes exponentially greater as you continue to rally higher. If you're spending too much time worrying about things you can't control, then you'll never be able to take action. What did I say at the beginning? You have to play offense. You cannot sit here and play defense. If you were out up here, right? Let's say you were lucky enough to get out up here, right? And you didn't trade anything down here. Guess what? You lost money. Why'd you lose money? Because the value of the dollar dropped during this time. So, if you're in dollars, right? Just sitting here, not doing anything, meant you fell behind. And there's a lot of people coping with that and trying to, but. There is no buts, guys. The truth is what it is. If you were lucky enough to get out somewhere up here, right? And you didn't trade anything on the way down, lots of opportunities to trade, even on the upside, lots of opportunity to trade on the downside, right? We've been talking about targets the entire time, right? Every time I talk to you, I say, listen, here's what I think's going on. And if we go through this level, then we should be looking for a target up here. But if we fall through this level, then we're looking for a target down here. You guys have had that for whatever this has been here, on this downtrend here for over a year, right? So many opportunities to make money, and everybody gets scared. Nobody wants to play offense. Everybody wants to play defense. And then you lie to yourself and tell you, yeah, but playing defense, man, I didn't lose no money. But you did. You lost opportunity. There's opportunity cost. You lost that on that drop down. All these opportunities to make money for over a year, you lost. The value of what you hold, you lost. Because the dollar has been dropping in value over this time right here. Well, we'll look at the dollar chart in a minute here, right? From that 114, 115 area down to about 100 now, right? Huge drop, huge loss of value. You have to play offense, guys. I say offensive, and I don't want you to offend people, but you have to play offense. You cannot sit on your rear end and go, oh well, as long as I don't do anything, I'm okay, right? No, you're not okay, because the world will continue to advance without you. The world will continue to move on without you. Does that make sense? Let me see here. Hey, Mr. Wilk says, I'm only out of the market because my UK bank Virgin Money will not allow crypto purchases anymore. Oh, man. Can anyone recommend a bank in the UK that doesn't block debit card purchases? If you guys know, drop a quick comment in there for name Mr. Wilkes. I don't live over there, so honestly, I don't have any help for that. Any ideas there? CMAC, you want to join, man? I'll tell you what, you're the first one. I'll tell you, send me an email. Send me an email or get on our Discord server. Let me see here. And then send me a DM over there, and I will get with you after this here. There's the link to the Discord server right there. Jump on there and just like I said, either send me join the Discord server there and send me a DM, or tag me in the channel there, or like I said, send me an email to christopher.inks@texaswestcapital.com, and I'll get through it with you, man. All right, guys, one more then. If CMAC's going to do that, there's one more then at that $3,000 price, right? So anyway, so here we go. So I'm going to tell you guys. See, here's the thing. How do we determine what's going on here, right? So if we're looking at the larger trend, again, the bearish trend here, right? The bearish market structure is low. It's high, right? And then it's low, and then lower high, lower low, lower high, lower low, lower high, lower low, right? So on this daily or higher time frame, I mean, really, honestly, guys, if we're honest about it, low, lower low, lower high, lower low. So really, we've broken that market structure here, right? But this is one candle up. When I'm looking at market structure, if we're looking at market structure that's lasting days, weeks, whatever, I prefer to see the same thing. So for me, the real last kind of higher low, significant higher low here on this bearish market structure is this 25,214 and 57 cents up here. This is on Coinbase. So whatever exchange you're using, Binance or whatever, it's this rally here, your mid-August swing high. And if you guys will notice, when we talk about stock indexes, it's that same swing high that's important, right? So if we break this, that means this bearish market structure off the all-time high is no longer, it's been broken, okay? That means we have a bullish market structure on the daily or higher time frame off that low, right? Now, we had a little bit of a conversation on Twitter between Cheds, I think it was, and the chart guys, and Hank and me, and basically talking about, well, how do you figure out what how do you correctly identify these lower high, the trend, right? And so, yeah, it's dependent on your time frame, right? So coming off the all-time high, you're going to need at least a daily, if not a weekly time frame, okay? You're not going to do the 4 hour or something off the all-time. That's silly, right? So coming off that all-time high, this was your last major swing high, your lower high, right? This is not here because you didn't get a lower low. See, until this is the lower low, this is the lower high. Until you break down below this lower low, price can still rally higher and make a higher lower high, right? Maybe even a higher high above the last one, right? But once you break down below your last lower low, now you have a new lower low. And that locks in this lower high. Okay? So coming off this lower high here, you get to a low. Yeah, sure, there's a low here and there's a rally up, but you haven't broken down below that last lower low. So this is potentially a lower high, but had this gone up and rallied up above it and broken out here, well, this wouldn't have been a lower high, right? This would have been a lower low, and then breaking out above this would have given us a higher high. Higher high over that last point. Okay? Jay Andrews, you messaged me as well? All right. Hey, listen, guys, if you still want to get in, go ahead and send me a message afterward, and if either one of these guys decide to back out, you're next in line. But it looks like we may have R2 here. This is exciting. Yeah, good times, right? And so anyway, let me continue going on here, man. I just love when people want to better themselves, right? Listen, guys, in life, making a choice, you have to make a choice to make a change, right? Change does not happen without you consciously making a decision to do so, okay? And so I get really excited when people understand that. And maybe it takes a little thinking, but they finally get to that point, because when you get to that point, your life starts changing, right? For the better, right? When you consciously make these decisions, okay, I want to do these things that are going to affect me positively, you've started a change. You've started a reaction. You started this thing in yourself. And, you know, it's something that I went through, that I had to go through myself as well, right? I wasn't always this great positive guy you see here, which is why I'm so passionate about it, why I'm so strong about it. Because when you do figure that out, man, oh man, life it changes your view on life, which means all of a sudden opportunities start appearing. It's not that they weren't there before, you just weren't noticing them. I'm telling you guys, in trading and in life, what's going on up here and here is what determines everything. Nothing else changes anything until you change what's in your head and what's in your heart. You do that, your life changes, okay? But it requires effort. It requires you to do the things you have to do. I can't do it for you. Nobody can do it for you, okay? Let me see here. Fiboswani says TWC is going to rock in 2023. Man, just for the fact that you're there alone with us, man, that alone is going to make it rock. But yeah, we got some pretty cool stuff we're going to do this year, guys. Kimasabi says, for me, the weekly closing a higher high puts a high probability of finding a higher low to follow. Yeah, and that's exactly what you should be looking for, right? Basic trading, guys. Basic trading is highs versus lows. Swing highs and swing lows. The key is, one of the things I had trouble when I first started trading was understanding what denotes a higher high or a higher low. Or a lower high or a lower low. What denotes the actual swing points? And that takes... I'll be honest with you, it takes a little bit for you to kind of look at the markets and understand it and watch it before it really kind of clicks. But it will click, and when it does, you'll never lose it, right? And you start understanding, you know, here's a major swing, there's a major swing, here, you know, as it's going through here. Larger time frame, here, you know, as it moves through. That part alone, getting that down, will help you so much with trading. Because whether you're doing Wyckoff or whether you're doing Elliott wave or whether you're doing, support resistance flips, whatever, you'll notice that they all kind of align at the same areas. Just different ways of looking at the chart, right? So as I keep telling you guys, it's not the system. Most of these systems actually work. But it's all that mental and emotional stuff. So, and what that comes down to is your consistency and discipline, or lack of it, is what causes these things to fail in your eyes. Again, it all comes back to you, right? It all comes back to me, what I'm doing. Right? If I'm not getting the results that I'm looking for, I need to change what I'm doing so I can get those results, right? It's not going to just happen for me. But man, oh man, once you get it figured out, once you see that, once you understand that, holy crap, the way the world changes is amazing. How much stock do we put into the huge channel from July 2017 to now? Rallied right off the bottom. Top of the channel is like 160, 170,000. Yeah, I mean, you know me. Channels, bread and butter, what I do, guys, right? So yeah, I mean, the fact that we're rallying off that, yeah, that 160, 170, I mean, that's the target we're kind of looking at, right? Elliott wave, depending on how we look at it, gives us a target, 93, 100,000, somewhere in there. But if we're looking for blow off top, we should expect significantly more movement, right? So we could see that. Yeah. But also, just because you have a channel doesn't mean it necessarily has to reach that upper limit as well, right? I think right now, you look at that as possibilities, but you pay attention to these levels as we're going through here. And you want to make sure you're taking these levels out. And then you're finding support on the pullbacks at the previous level areas and continuing up through them, right? If you're doing that, you can continue looking higher. I mean, if you just want to look at plain and simple how you look at a chart, right? Let me see here. Let me catch up with you guys here. Okay, so here's Bitcoin, right? Ethereum, man, look at that Ethereum move. Remember when I talked about this here, guys? And I was looking like, okay, I was thinking maybe we'll get one more pullback from the R1 pivot area here, from the orange resistance toward the pivot here on the daily. And then I was looking for a breakout. But I said at the time, as I always do, I'm like, but if we are truly aggressive off the lows, we won't get that. Instead, we're going to get this rally, this impulsive rally and breakout through that channel resistance, right? And that's what we got. And that's what we got. And so that initial target sitting up here at 1700, right? We've just about hit that. Look at this. We rallied through the R pivots here on the daily. And look what's happening here. We're pulling back here, right? Look at, guys, pay attention to what's happening here. Stoke RSI, topping out right at this point here, right? And we pull back and we rally up higher. But what's going on is we're rallying up higher and pulling back locally here. Our Stoke RSI is resetting. So yeah, we're still overbought with RSI. But remember, guys, when you're looking at RSI, 80 denotes, or the 70 here denotes overbought, right? Now, typically, the way you guys often look at that is, oh, you get above 70, you got to look for a pullback, right? But when you've got a true bullish, strong bullish trend, that thing can stay overbought for a while. It's that thing we see online where everybody talks about, oh, you know, the market can stay irrational longer than you can stay solvent. All that means is, what it means by irrational is doing something other than what you think. If you think you should be getting out because you're overbought here, and the market continues rallying up, to you, that's irrational. That's what it means, right? And you keep trying to sell on the way we're down, right? And so you get this bearish divergence kind of thing going on here, right? But look, there's no real follow-through. Everything in price action is about follow-through, right? Yes, you may get what looks like a potential top. But if it does not follow through, it doesn't follow through. It's going to keep on going up, right? And so instead of following through, it's finding support at this previous area. We kind of built this little base here at the R4 pivot. And we rallied up to the R5, pulled back the R4 pivot. We're trying to find support here, right? For potentially another breakout higher. So I've got these general 1700, 1850, 50, and 1987 kind of targets going up through here as we continue to maybe move up here, right? And so what does that mean? Well, I mean, if I look here, again, like Bitcoin, this is 5 up, right? And 3 back. So this right here is a 1, 2. This right here may be a 1, 2, 3, 4, 5. So this may be 1, 2, 3, 4 playing and get a 5 up, right? But that's still 1, 2, and it'll be a 3, 4, and a 5 still to go, right? This doesn't have to be 3. This could be wave 5 of 3 overextending. When you have bullishness off a low after a long bear market, right, with year plus going down, right? And you remove all that supply there, right? It makes it easy for price to rally, which means you get these overextensions. So until the party stops, you should default to continuing higher. Period. I don't care what you think. Look what happened here. The blue line is the 50 MA. The red line is the 200 MA. They've both curled up, and the 50 is catching up pretty quickly here to the 200. That would give you what they call that golden cross, right? Now, if we continue rallying here, this is going to happen well below price, which means instead of saying price has to continue up when you get that golden cross, because the golden cross isn't happening on the price action, because it's happening well below it, it would signal just like confirmation that the rally happened. Okay? If you're looking at golden crosses or death crosses, you have the most likelihood, of them playing out as you would expect. So golden crosses prices rallying higher. Death crosses prices coming down lower. You'll have more likelihood of it working as you expected if that cross happens on or near the price action. If the price action's already taken off, before you get the golden cross, it's already taken off. It's actually causing that golden cross, right? It's move up. So it's kind of played out. It'll pull back and then it should continue to rally. On a death cross, same thing. If you get a death cross well above the price action, well, it kind of says, okay, well, the down has already happened. It's pulled and forced that cross. Now we'll probably get some sort of bounce, and then you want to see, does it continue up through it or does it get rejected and continue down lower, okay? Let me see here. Michael's talking about the channel, that rally on the channel through Bitcoin. He says the EQ of the channel is at the previous all-time high, so it makes a lot of sense. Yeah, exactly. Kind of get the rally up to the EQ, pull back to support, and then break out through the EQ toward the channel resistance, right? Yeah, definitely, man, definitely. Kind of like this right here, right? You drop down to support, hit the EQ, pull back, broke out, boom, and then comes out higher, right? Tay Hov, I almost want to say the. Says next week up 25 basis points. You think the DXY will raise up? I think we're probably getting close to the extension on the moves of the markets, right? So their first full, 5 waves off their all-time high or all-time low, I think is nearing a completion. And so, yeah, if it is, you're going to expect a bounce. A bounce for the Dow the DXY because it came down, right? We'll pull that up in a minute here. But a rejection for risk assets, stocks, crypto, stuff like that, as they pull back and reset and then continue on. Yeah. But the real story is not that there's continued raise. It's not that there's a continued rise in interest rates, right? It's not like, oh my God, they're raising interest rates, so that's a bad thing, right? A negative thing's going to show up in the market, right? The market is looking at this deceleration, and it's been quick, right? We went from 75, 75, 75, 75 to 50 to 25, and now the market is not only pricing in this almost 100% probability of a 25 basis point rate hike in February, right? But look what happens in March. So you look here, right? 25 gets you right here, 450 to 4.5 to 4.75 Fed fund rate, right? Look what happens here in March. They got a 14% chance, 14% probability right now that it stays flat in March. There is no rate hike. Now, there is still an 84.3% chance they raise it just 25 more. Look what this does to May, guys. End of Q2. You're getting toward Q2, right? June is actually the end of Q2, but you get near there, right? All of a sudden, if they raise it 25 here in February, 25 in March, there's a 55% probability right now that it stays flat come May. Right? Then you get to the end of Q2, and this is where I was talking about. At this point, look what happens here. Again, 50% chance staying at that 4.75, 5 interest rate there, Fed funds rate, right? And so as this is just right now. As the economy continues to decelerate, as things continue to do what they're doing, as I've explained to you, the Fed is not going to just reverse all of a sudden. It's a deceleration. That's why I've been talking about it for months here. It's what everybody else misses, right? So what happens? Well, they continue to decelerate. All of a sudden, there's an actual likelihood that we may even see the Fed pivot by the end of Q2, by the time we're getting to June. Potentially. Now, still way too early to really tell for sure, but that deceleration is hard and quick right now. We've gone from months and months and months of 75 basis points to all of a sudden 50 basis points last month to 25 basis points probably coming up in February. And then, yeah, it looks like maybe 25 in March, but maybe not, right? We'll see how this information keeps going, right? PCE comes out this week, 27th, I believe, of January. That is the Fed's preferred inflation gauge, right? It's, the media and everybody's all, obsessed with CPI, but as of around, I think it was 2011 or 2014, somewhere right around there, the Fed changed their preferred gauge from CPI to PCE. And there's differences in them, but one of the big differences, CPI gives twice the weight to rents, right? To rental prices, right? And rental prices, of course, the way the Fed collects them are really lagging. They're really, really lagging. So rents are going to change for like a year. They might drop for a year before the Fed sees it in the way it does it, right? So you have a larger impact from shelter, right? Rents, mortgage as rent, whatever, stuff like that, right? On that CPI than you do on the PCE. So we've got that coming on 27th. We've got the Fed funds rate, or we got the Fed rate hike thing happening February 1st. And then later that week, we've got unemployment coming in, right? Unemployment, again, for over half a year now has been decelerating. We were at 769,000 jobs added to the market back right prior to, I think it was right prior to last summer. And ever since then, it's continued to come down, right? It's decelerated. Yes, there's still job growth, but that job growth has come down significantly. The question is, do we continue to decelerate coming into the non-farm payroll report in the first week there of February? Or, does it continue to decelerate, or do we actually get a miss to the downside? Right? So, the Fed is mandated with two things, right? Employment and inflation, basically, right? So it should be interesting to see how that plays out. But I see no reason to think deceleration doesn't continue. Who is it? Microsoft that just let go of 10,000 jobs, right? And we've seen Amazon do its damage a bit here as well, and a few others, right? Facebook and whatnot. We saw Elon kind of remove everybody at Twitter, right? So these jobs are going to the wayside, right? But there continues to be more job growth, right? At least according to the Fed's measurements, right? So we get to see how this goes coming up here. Let me see here. Hey, take care, Fibble. So we should our BTC first. I'm not sure what you were asking there. I'm sorry. Hope the Fed doesn't up to half to 35. No, there's no. I can't see anything in any of the numbers in anywhere that would even suggest the remote possibility that 75 basis point comes up. I really don't see anything anywhere that even says 50. I mean, this is still right in line with what I said a year ago. Everything coming in continues to decelerate. The Fed just doesn't have. The only thing that the Fed even has at this point is that there continues to be job growth. But like I said, that is decelerated significantly from almost 800,000 over the course of half a year down to, 100,000 and some change, right? Big deceleration. CPIs continue to come down. PCEPIs continue to come down. So yeah, I mean, honestly, I would be surprised if we got anything larger than 25 basis point in February. So again, that doesn't mean it can't happen, but there is nothing that in the numbers anywhere that says we should even be getting 50, much less 75. And the Fed itself is even talking about hinting at lowering. It's continuing to slow down with the rate hike. So, yeah, I don't think we really have to worry about any significant moves with that. Yeah, Michael, I was about to say that. Yeah, so Microsoft's dropping 10,000, and then they're putting in however many billion into ChatGPT, right? So they were an early investor in OpenAI. So they have the ability now to use ChatGPT for their Bing search engine. Now, Google's working on its own artificial intelligence kind of thing for its search engine. But, the number one search engine is Google. The number two search engine is YouTube, right? And, of course, Google owns YouTube, right? Bing is nowhere even close to those, right? But with ChatGPT coming in and the ability to be able to more intelligently give you the results you're potentially looking for, it gives Bing the possibility to make up some ground. Does it make it number one? I don't know that it does that. Certainly wouldn't happen overnight. But yeah, put a lot of money into that while they're getting rid of the workforce, right? Kind of interesting there. Telluride says 10,000 coders traded for one ChatGPT. Yeah, right. Aeroquin, if we do get a pause, do you anticipate that being a catalyst for a melt-up? Perhaps I'm biased, but I'm still expecting that supercycle top coming in sooner than later. I'm still on the fence about how does this work, right? So I still think, let me kind of, let me get right to that. Let's look at the other chart here real quick. Let me see here. Yeah, there we go. So, this is the E-minis, right? So this is the S&P E-mini futures contracts here, right? The idea is we're looking at a leading diagonal down for A. We've got to move up for B, and then we've got 1, 2, 3, 4, 5 down here for C, right? Check mark, boom. Now, there's two possibilities. If this count is correct, which it appears to be, there are two possibilities. One is that this is ABC and done. The correction's done, and we're going to head up to a new all-time high from here. The other possibility is that this ABC is only wave W of a WXY, right? And so what does that mean? That means we would likely be looking at some sort of, some sort of A, B, C kind of thing here. Heading back up for X. Okay. Now with that, I think we would get a breakout above this swing high here. Generally for ABCs, we try and look for 100% extension to give us wave C. So wave C is equal to wave A, right? And in that case, that would get us up here around 14,446, right? Which makes sense. It's all this sideways in that first wave 1, 2 of this descending leading diagonal for wave A, right? So that would make sense. And then we would be looking for, again, the idea of a one-to-one, right? W to Y. So there's A. So for W, right? And there's X. And then you're looking at potentially getting down here around 3,150, 3,160 for this, right? So we can't rule this out. We can't rule out this possibility, right? But until we get a drop, right? Until we're getting below wave B here, we should continue to look up, right? So we look for this continued move up here. Gives us maybe an ABC up here, right? If this becomes just 3 waves and then we break down below wave B here, then you should be looking down here. Now, it doesn't have to get all the way down here, and it could go lower, it could stop shorter, but you need a target to begin with. And generally, we look for wave A to, wave C to equal wave A, or wave W and wave Y to equal each other, kind of thing. So this could still happen. So this comes out, okay, so what do we expect on the move? Do we get a melt up? A melt up would say, okay, that would be, this is wave 3, this is wave 4, this is wave 5, and you get a quick hard move up, and you get an explosive top, right? You get a blowout top, right? And that would align with what I've been talking about for years now, running into here, the idea that maybe we're getting to the end of that super cycle, right? The last super cycle high we had was 1929, right before the Great Depression. So that's why when I talk about super cycle highs, right? That would be like a 1, 2. This would be a 3. We'd pull back for a 4. And so that 4 would probably be comparable to the 1930s depression, right? But again, it would be probably most likely be a lot more sideways. I mean, you're going to have some downside, but overall it's going to be, potentially decades of sideways. Remember, it took 1929 to 1932 to make a low, right? And then it took to 1955 or something like that before we broke out above that 1929 swing high, right? So you'll get 25 years, quarter of a century right there. So we should be looking at decades of sideways after we make the down move, right? Before we even break out to a new all-time high after that. But the question is that coming, or do we have a more extended move up that takes maybe 2 to 3 years? And I don't know yet. I don't know which one yet. So I really don't have a personal opinion about which way. I can see them both happening. Until we get some further rally, though, right now it's way too early to really kind of figure out which one it may be for sure. Or, more likely than not, right? Let me see here. Who is this over here? Dr. Zoggs, what's up, mate? Says ChatGPT is amazing for search. I have a ridiculous conversation where it looked at my code and told me the library and the answer. Yeah, a lot of people I've seen are using it for coding. Yeah. So if you want to figure out Pine scripting or, Python or, JavaScript or whatever it is you happen to be, it means a great thing to go into and kind of put and work with it. It still makes mistakes, but man, oh man, it's a quick once over on your code and kind of lets you know, hey, here may be some issues or here's the way we can approach this. And then if errors are coming up, you say, well, error here, blah, blah, blah. It'll go back and it'll relook at that code and it'll, correct for those errors. So yeah. It could be quite great for that. Let me see here. With the Ethereum, Bitcoin retesting the previous descending trend line, are we looking at a bit of an alt season coming up? Bitcoin dominance doesn't seem like it wants to pull back hard. It's hard to gauge it. Last time Ethereum Bitcoin tapped the channel bottom, it rallied 30%, and prior to that 3 times. And it's sitting on the monthly 20 MA. Yeah, I mean, it makes sense, right? So what normally happens in a bull market, what happens, right? Usually Bitcoin and, the top players, Ethereum, whatever, right up there, right? They usually kind of rally together. But your more degenerate altcoins, usually the money then when Bitcoin and Ethereum, whatever, kind of make their top and they kind of do the pullback, the money comes out of them and goes to them more degenerate kind of low cap alts, right? Yeah. So I mean, if the bottom's in, generally I would kind of expect that to happen more or less, right? So as Bitcoin, when Bitcoin's showing a lot of strength, you're going to see that in the other top the top one's up there, top 5, whatever. But the 100 down, 200 down or whatever on the list, on the market cap list, those are you're a lot smaller cap. And so it runs through cycles, right? So you go your large caps, mid caps, smalls, and you kind of just, your money works its way through those, right? Yeah. So that's what I would kind of be looking at with that. Let me see here. Where is my dollar chart real quick here? We'll talk about some other charts here real quick. Ethereum, Solana. What else we got here? Man, you know what? I'll do this. Come on. There we go. All right. DXY. Where we go? I had it here somewhere, but whichever's the same, right? So what's going on with the DXY right now? So I mean, at the end of the day, guys, we're still trending down, right? Importantly, we've lost the weekly pivot. That's important. That's a significant area of support or resistance. You can see here we went sideways. I mean, basically from here, right? First time it touched was right here around the beginning of December. And then we finally really broke down on it a month later, right? Kind of went sideways for a month and then finally really broke down. We rallied back up, rejected, continued down. Got this little wick here, but look, we're continuing to push down. We still got wicks on top. It still wants to go down, right? So we've got kind of this initial target around 100, right? I think I've got it at 100, yeah, 0.119 here. But, my thoughts are if we make it here, we might get a rally up the weekly pivot, but I think we continue to dropping down toward this 93, 94 area to get to that weekly S1 pivot, right? So that's what I'm thinking we've got at the moment here. Now, even if we were to break out above the weekly pivot, it's just a new year. The weekly pivot just began at the beginning of this month. I could see some rally up. I could even see a rally up here toward this this kind of 108 to 109 area, 110 area, right? I could even see a rally up to there and a rejection and coming back down. I don't expect this to, I think that top's in there. At least right now, I still think it's in there. And so, yeah, I mean, if I'm looking at this, I'm going, well, heck. I mean, if I was to look at this, I think now with all this doing here, maybe it's like 1, 2, and then it's, it would have to be like a leading diagonal, right? So you have like this A and maybe like a flat here, right? But that looks like an ABC. So it looks like ABC 1, 2, ABC 3, 4, and then this could be, as a leading diagonal here for 1, right? 1, 2. And then we get this kind of, excuse me, could be maybe a 3, 4, and a 5, right? So now we've got 1, 2, and going down. If I'm looking at this, all this overlap here, this looks like ABC is 1, 2, ABC is 3, 4, ABC is 5. So this looks like a 1, 2, right? So if this is a 1, 2, this is maybe 1, 2, right? So you got to figure out what's kind of going on here. Is this 1, 2? I'm sorry, here 1, 2, and then maybe 3, 4 is a flat, and then 5. So is this 1 short 2 get rejected right here, right? I mean, look where it's, always look left, guys. This is something I teach. Always look left. Look at this area right here. This is where you're getting that rejection. Resistance, resistance, support, support, resistance, right? Support, support, resistance, resistance gets rejected there. So is it possible we've got a 1, 2, and now we got 1, 2, 3, 4, 5, and this may be just a 1 with an A, a B, and we'll get a C back up, right? So we get this 1, 2 as a flat, and then continue down further, and just head on down toward this, right? So I mean, ultimately, I don't feel like there's a lot of strength coming. Look at what we've done here. It hasn't been able to. You've got people trying to buy the dollar all the way from 106 down to where we are. Stochc RSI has not broken down into oversold yet. You have them continuing to try to buy, but price continues to drop insignificantly, right? Again, 106 to 101. 102, right? So I think we continue to see that just bleeding them out, continuing down. People can continue to buy because they think that we need this new all-time high or this new high for the dollar, and I don't see that coming at the moment. I really don't. So, again, Stochk RSI was reset. RSI hasn't hit though. Weekly has been my big one there. So I looked at the daily, I go, it hasn't hit yet. And look at the weekly. Weekly hasn't hit yet either. I think we still have further downside. Looking for the weekly to get that drop down into oversold, right? The last time that we got the drop down into oversold, we almost got it here at this August, almost the end of August 20. And then this was the reversal, right? So you got this bullish divergence. Last time we actually did drop in though was January of 18, and then prior to that was September of 17. There we go. So you got this bullish divergence here, and then you got this this bullish divergence, which almost dipped in right there, right at the lows there, right? So here we are getting kind of down here, but even if we were to follow with bullish divergence, the expectation would be that we come down further, right? So at this point, we had a further drop from the low from the beginning of that bullish divergence, right? We had a drop here of another 3% or so, right? Over here, wait, no, yeah, it was right here, yeah. Over here, we had a drop of about, again, 3%, right? So even, let's say we were to think we're going to do that right here, maybe we get a rally up to the weekly and drop down, right? You'd still be looking, based on previous, what's happened there, you're still looking at a move down here. Look at 98, 3% gets us down here around 98.5, which is this area right here. Makes sense, right? Look at where this is right here. Look at that resistance right there. Right? Do I have any position now in what? I have multiple positions right now. It depends on what you're talking about. Yeah, I'll look at our XRP here in a minute. Let me see here. So we've got kind of that thing going on with the dollar. So again, dollar generally expected to continue lower. I don't think we see a big movement in the dollar higher, a decent bounce until you see Bitcoin and Ethereum and stocks kind of getting to the point where they actually really pull back. I think, again, dollar's going to continue dropping as they continue rallying, right? I posted this chart on Twitter. And so this, to me, looks like a pretty clear 5 waves up and then 3 waves back, right? And then, 3 waves back from here, I guess. The high up here is 44.80. Over here is 44.80, yeah. But anyway, so you get this pullback, right? So this, to me, looks like a 1-2. And if this is a 1-2, then 5 has a minimum expected target around $100. Overextension could see it at 150. So I think Atom, look at this monthly on Atom here, man. This huge bullish engulfing candle here. 3-wave decline, right? We should be looking for overall a rally up into the weekly or the monthly pivot here, at least. And if we break out above that impulsively, R1, and then we pull back and then we break out higher, right? Rinse and repeat for what we usually look at. You can see that the R1 pivot finds us right at the beginning of this supply up here in this wick. And it's also the EQ of this ascending range here. So the idea is we rally up here, we pull back, and then we break out higher, we come back, and then we rally up higher. So time frames, I don't have a time frame on stuff like this. Everybody always asks. I can always tell if somebody's really, an amateur trader or not, because usually the amateur traders will ask for a time frame. They'll want to know, when do you see this happening, whatever. The truth is, timing is a very, very hit and miss thing. And so I'm not very good at timing. Most people aren't. And so I don't even try. I don't even worry about it. I pay attention to the levels. I look for good entries and good exits, and I do that. And I let time happen, with it as it does, right? Yeah. I'm long Bitcoin. Yeah. I'm assuming you haven't been following me too long. Yeah. So I've been long from Bitcoin a few different points. coming off of when we talked about the lows here. So I was long here. I actually did that live with our members. Got stopped out and then got back in and rallied up. Got a few more longs in along the way here. This position that I was down here was actually my, okay, well, I think this may be the bottom. And if it is, I'm just going to hold it till it goes out. But it came back against me, stopped me out, so that was fine. But I'd made a couple of trades along the way here, right? I went long again down here. What was it, around 15.7, I think, or something like that, guys? If you're in Discord, you might remember. I think it was like right around 15.7. I went long again over here at around 16. Where was it? I think it was probably right around this 16. Probably right around 16.7 because it was the breakout of this flat area here. Again, with the idea that if anything, at least this was an A, a B, and we were going to have at least a C. And if we had a C here, this was 1, 2. So we should be breaking out higher. That was my thought process, right? But always keeping in mind the idea that when we view this through the lens of Wyckoff, this, and then this together all looks like accumulation. So, you know, still long from all that. I opened another position more recently here. This one I'm looking at the thing right now here. 22,854.50. So right in here, looking for this breakout higher again toward those moves up, right? Looking toward eventually kind of this 24,900 area and potentially up here around 26,740 maybe even, depending on how aggressive this move gets here. So that's what I'm kind of looking at the moment as far as that goes. Let me see here. Yeah, man, Bitcoin's wanting to break out, man. I'm just looking forward to do it. Make me some money, right? In trading, time is a meme. Yeah, it really is. And I don't, you know, I didn't say what I said to obviously, you know, to be disrespectful for anybody. I just mean that most often professional traders don't really have a timing preference because, you know, again, we realize that it's really difficult to make it happen. And when you do, it's very hit and miss. So most professional traders don't actually work on time. They might have more major times, and usually when they're doing that, they're usually trying to look at some sort of fundamental thing going on with the economy or whatever. But I think if anything's shown us over the last couple of years, it's been that there's a lot of different things going on in the economy than we're normally used to, and so things could really change, right? I can't tell you what you need to do personally yourself. That's against the law here because I don't currently hold an RIA license. And so I can't tell anybody specifically what they should do. But, you know, again, my thought is, my personal idea is, you know, again, is that I'm not holding dollars myself because I believe that we've topped out and we're likely headed even further overall. And then again, with risk assets, it seems like we've potentially bottomed or heading up. So I've traded my dollars for risk assets like stocks and Bitcoin, and longing against the dollar and a lot of the more major pairs, the euro, Great British Pound, Aussie, stuff like that. So yeah, you know, I mean, whether I wanted to or not, I couldn't legally tell you what you need to do specifically for that because I live here in the U.S. and have to abide by U.S. securities laws. I don't like the idea of being in prison. I'm too pretty to go to prison. I'm not SFB, man. So yeah. Yeah, Aerocoin again. Yeah, like I said earlier, markets are forward-looking, and it seems to imply risk on for 2023. I think that's the best argument right now. I still want to see like, you know, again, I still want to see the S&P, the SPY, the SPX, whatever you're looking at there, and NASDAQ kind of break out above that mid-August swing high. The Dow has already done it, but if they can do it, that confirms that breakout, and that increases the odds significantly that this was just corrective, ABC, and we're heading up to a new all-time high. But again, we still have to watch for the possibility that we just get 3 up into an X, and then we move down 3 more down for a Y. But even if we did that, I mean, that's just a bit further there, and then, you know, rally it. If that's a WXY, then, you know, unless it's a WXYXZ, which would always be possible as well. But, you know, the idea is there would be a bottom coming in, you know, not too far off, and we could ride that up as well. So yeah. Again, I can't tell you, man. I can't tell you what to do personally. Okay. I can't. Again, it would put me in trouble with the U.S. Securities Administration, right? The SEC. And I don't, like I said, I don't feel like going to prison. I'm really like careful about that, and a lot more of that because I do have a law degree. So if I was ever to go to court, they'd be like, "Well, look at you got a law degree and you studied antitrust law and securities law while you were there, so you should know." I'm like, don't want to do that. By the way, I'm not a lawyer, guys. I give no legal advice. All I did was get my degree. I never actually took the bar or anything like that. I don't pretend to be a lawyer. But I just use what I learned there in law school to kind of help me understand more along the lines of what's going on. For instance, when XRP started getting popped over by the SEC, everybody freaked out around it, right? And I said, what's likely going to happen is most of y'all are going to kick yourselves because it'll pull back and then it'll rally even higher. And so at this point now, if we're looking at XRP, right? I mean, it's pretty much what's happened. I said what's likely to happen is they're going to get some sort of slap on the wrist because too many people are involved. Too many people would be hurt if the SEC, did anything more really than a slap on the wrist, right? If so many people have so much money in XRP that if they basically made it worthless, I mean, the government ends up hurting people, and they're not trying to hurt people, right? Not like you think sometimes. So let's see here. Where are we at here with XRP? Zoom out here. Let me kind of zoom out to a larger time frame, get a clean chart here. Yeah, I mean, so if I'm looking at this, right, basically what I'm looking at is this is a 1-2 here, right? So I think the way I've looked at this is like an ABC. ABC is 1, 2, ABC is 3, 4, and then ABC is 5 as a leading diagonal. And then we got A, B, C here. And notice we found support and we continue. Look at where we're finding support, guys. High volume node, look at all the way across. Resistance, support all the way across. We rallied up here. Where are we finding resistance? Resistance, support, right here all the way across, right? So if you want a bigger picture of it, I mean, you can look for a breakout of like this closer resistance here. You should get impulsive breakout. But again, the idea is that, we might hit the pivot and pull back and then break out, but ultimately looking for a move up to this R1 pivot area, pull back to the pivot and break out higher. We should get 5 waves up toward this $1.70 kind of area, right? And then we get that pullback. We got a ladder. So, I mean, if we look at it here, I think there's a good potential argument for things really kind of, maybe even making a new all-time high. And if we think about it, if we think everything, sorry guys, I got a heck of a headache here. If we think of everything in terms of some sort of blow-off top, a grand super cycle kind of top, then it would make sense that we see all these things go to crazy levels, some kind of like melt up, some kind of blow-off top type thing, and then that be the big thing that happens, and then everything just corrects for quite a while, right? So, again, right now, looking for, from a weekly standpoint, looking for a rally up to the pivot. On the weekly, a pullback probably toward this 40-cent area or whatever. Breakout higher to the R1 up here, maybe, 75, 80 cents. Pull back down to the pivot right around, 50 cents. And then breaking out higher and, kind of do this 1, 2, 3, 4, 5 up here toward $1.50 maybe. That gets us 1. We pull back 2. And then we kind of break out. Generally, that's what I would look at on there right there, right? So, I think there's a lot of possibility here. But again, it was what I told you guys was likely to happen, right? You get the pullback. It get cheap. And then, of course, if you're in the U.S., you have a hard time buying because everybody delisted and whatever, right? And so it makes it hard if you're in the U.S. But the people that, like, just automatically thought, oh, it's never going to go back up there, and they've been scared to buy, right? So you had your chance, then you had another chance, right? You had another chance to buy. You had another chance to buy. You had another chance to buy here, right? So lots of chance to buy along the way. Most people not getting really back into it, but going to kick themselves, I think, likely more than anything else. Okay? So yeah. So this will get us with XRP there. And you notice everything I'm looking at everything together, right? So, again, Bitcoin is the rising tide that lifts all ships. If Bitcoin's rallying, if Bitcoin is bottomed, then everything else should generally have bottomed for the most part, right? In terms of cryptos. And if that's bottom, then the likelihood, because it's a very, when you think of risk assets, right? Bitcoin is like really, really risky, right? Compared to like stocks. And so usually Bitcoin's going to be, you should generally expect it to see larger movements, stronger movements. And so you usually will expect it to see a top earlier or bottom earlier than what you would normally expect in general terms with stocks. So because everything's a lot more aggressive with Bitcoin and crypto, right? So when we look at like Atom and you look at Ethereum and you look at Bitcoin, now we look at XRP here, right? I talked about Sol, right? Let me see here. Well, heck, we can look right here at Coin. Look at Coin, right? So if you're playing cryptos and you're looking at what stock should I do, look at. By the way, guys, man, listen. Jump onto my what's it called there? Email or my newsletter, themarketbreakdown.substack.com. I just talked about this past week, and basically I said, listen, if you're long cryptos and you're looking for stocks and what to play, I gave a list of stocks, like Coin and Hub and stuff like that, Mara, Riot, things that are like really kind of move with cryptos, right? Because they're crypto companies basically, right? Look for those. You can get in stock plays that move with the stock market, that move with cryptos more or less, right? By the way, you can also jump on to this is a new one I did, tradersessions.substack.com. And that one, what we're going to do is we're going to explore the threads that I post there. So I'll usually post a tweet, and then I'll post a thread based on that tweet, like a little expansion on that idea. And if you want to learn more, I've actually got the tradersessions.substacks.com where I'm going to dive in deeper on those threads and kind of help. The goal is just to help you guys, right? I mean, they're free newsletters, so it's costing me time. I'm not getting any payment out of it, right? But the goal is I'm trying to help 10,000 traders at least this year become better traders, become more consistently profitable, to make money, right? And so these are the ways I can think about doing it. So if you join that one, that'll give you that, we'll go in greater depth on those things so you can get an understanding of these principles that I talk about, and these things you have to understand, if you want to be really successful as a trader, right? So lots of avenues for you guys to get involved. Like I said, we've got the 2 newsletters there. I've got some other ones that I'll eventually get going here. They're already set up, so if you want to join them, eventually they'll pop out and go. My newsletters are recommending them. I put info out there on Twitter, trying to put it more out there on Instagram as well. Again, we've got our Facebook things we're going to do this year. We're going to have a trader challenge. I'll put out more information about that when that happens. We've got the mentor program this year. We've got discounts on tier 3 just to get you in there, right? So we've got a lot of different ways that we're trying to help people as much as possible get in there, right? So, but yeah, I mean, if we're looking here, from Coin, right? The swing low is here. It looks like 1, 2. It looks like 3, 4, and 5. So either we've got a 1, 2 right here, or this is A, B, C. And we'll get it back up, right? You can see that the 50 MA is curling up. We're trying to get through the 200 MA right here. Let me zoom out to the daily here real quick. There we go. Look at that daily right there. So again, the daily kind of suggests that maybe we've got this as a 1, 2 and heading up further there, right? Let me see. Short kind of pullback, only a 38.2, but that happens. When bull markets are aggressive, and bull markets become aggressive after prolonged periods of selling, right? So if you look at this here, right? If you're looking at this here and you go, okay, well, it's, you know, we're going sideways here from June, right? I'm sorry, this is May, right? It's here. Then maybe, just maybe, you know, we'll continue to, you know, because we had this low right here, right? If we look at this, boom. All right, so we had the low here, came here, bounced down, right, boom. So the next thing I want to do is I want to just kind of take a look right here and go, okay, well, long term, what do we got going on here? And we say, okay, you know, we got some aggressive price action leading into and breaking out above of it. You can see the larger candle spread. You can see the larger volume. Okay, so that's good. Notice we also broke out at the, that's the same 50 MA right there, right? Shorter term moving average. Curling itself up there, potentially to cross with this, this longer term one, right? So yeah, so, you know, if I'm looking at this, I'm going, okay, well, maybe, right? We're back up into this kind of range right now. Right here, right? So this is kind of our range. And so we get this little move down, get this move back up. You know, again, if you need it to be a little more clear, you can kind of draw your channel on here. And that EQ works really well as resistance and support here. So I like this, right? So it's possible that this is printed basically a wedge here, the top, right? Support, resistance, support, and then doesn't actually hit support again, doesn't hit resistance, just pulls back and breaks out. So, you know, for me, I want to see a nice impulsive breakout above this kind of EQ area here at, oh, whatever this is here. Right around that 62 level. If we can get that, I'm looking for a target up here at, you know, 83. If we can get that, a nice impulsive breakout above that. I'm looking for a target up here at around, whoa, let me get back over there. Right up here at around 111, right? And in that point, if we're getting up here, the thought is we're going to pull up here, we're going to pull back, and we're going to break out, right? So if I look at this, yeah, you see, and so we get this idea we'll pull back here, the 38.2 or the 50 right here. Kind of gets us in the upper half of this range. And then we'd break out. And then, as you can see, this is a pretty easy move down, so we should have a pretty easy move up, which makes sense. You know, again, 1, 2, that would be 3, right? 3 should be a strong, easier move. So, I mean, it's looking like it's a good chance we may be bottomed here, right? So, yeah, as we continue to, you know, zoom out here, weekly. There we go with the weekly. Again, weekly looking not too bad over there, right? So we'll see how it plays out overall, but we do have that breakout, that resistance there. And so if we can manage to get over the EQ here, I'm looking for this move up here to 78, 82 kind of area. As you can see, that's the 50 MA coming down on the weekly. So again, if we break that, the idea is we should rally up. By the way, notice my target, that's just about the weekly pivot, right? Ultimately, from the weekly, everything else I'm looking at, right, should be a rally up to the R1, pull back to the pivot, and break out higher. Right? Look at that, 50% at the pivot. Wave 1, wave 2, break out higher, right? I said we should move easier through this area right here, right? So again, if this is a 1, 2, 3 here, right? 3, 4, 5, right? Wave 3 is this move through this easiness here, this inefficiency right here. And so ultimately, this kind of gives us this real quick general kind of wave 3 target here. You know, up here, 3 up here at around 360. Look at 5, right up there around 400, 420, right there in the supply from back where it opened, right? If we want to, you know, you can always run a what you call it here, channel like this, right? Just to give you on the larger time frame some areas that you want to see, right? As I look at this, I would expect a breakout of this descending channel resistance at the same time you get the pivot. So I think, I don't think we get a breakout here until maybe like around April. Here's me trying to time, guys. Right? My weekly looks different. Oh, I don't think I have this on log. Oh, I didn't have it on log, yeah. Is that what you're looking at? I mean, the count idea here should still work the same way. Let me see here. If we do this. Oh, yeah, okay. I see what you're looking at here. Yeah. We should be looking at log here. I don't know why this chart keeps defaulting back to arithmetic. Appreciate you letting me know. Yeah, so, I don't like that it just misses touching up here and it drops way down here before it touches. I'm not a big fan of that. So I'm kind of iffy about this. And as you can see, we're kind of moving sideways through it. So I don't think that's legit. I think if we're to draw a channel off that swing high, I think we maybe look something like this. You get the top, the bottom, the resistance, the support, basically the resistance coming back, and we pull back, which is what we usually do before we break out. So, I mean, God, where's the swing low? Is it the black one here? 31.55, 31.83. Yeah, this is the swing low here. I mean, so you just got to kind of watch it, right? We're coming up to the resistance of the local, this EQ here of this range. Descending resistance or so. I like this touching here better, but then I don't like the double touch here before it comes down. So it makes me think that maybe this is going to actually have to be changed a bit here. I'm not sure how much that would have to change. That's kind of interesting there. So I'm not too worried about this this descending line here. I'm more interested in kind of this descending channel here. And that one looks better. See, this one makes more sense, right? So what you have, is this breakdown here and then this move down, this throw under, pops back up, right? It breaks out, and then it closes above it, finds support there, and then we look for that move up. I think this is the better channel to pay attention to than the bigger one. So, yeah. What's up, Hank? Just in time for me to get done here, man. So, yeah. So that's kind of what I'm looking at. I think if you want to look at some sort of resistance on the weekly, I think maybe watch the 50 MA. But the setup here, the way in which this has moved down, I don't think it makes it conducive to a really great channel just yet. I think we've got to kind of, I think it'll end up looking something like maybe, let me see, maybe something like this. I think this gets interesting because you have the EQ providing support here and resistance, and then resistance, And then, again, I think we would get, that breakout through that pivot there at the same time, right? I think you get a move up to this pivot, a pullback, a breakout to the R1, and then that's 5 waves up to the R1, pullback. So then that's, 1, 2, and you get that 3, 4, 5 near that kind of swing high up here at the EQ of this supply, right? See here. Yeah, kind of around there, right? I mean, you can see that wave 5 target at 420 is just above that 408 kind of area of that EQ. So, yeah. 100K by next week. Source, trust me, bro. You guys are funny, man. But, yeah. So, yeah, I think that's how I would look at it there. But anyway, guys, man, oh, man, I'm over again as always. I was hoping to actually get done 40 minutes ago, but you know how that works. Anyway, I hope... I hope the charts are helpful, but more so, guys, in the economics, the macroeconomics explanations. But I think more so, guys, I really hope that what I talk about, the emotional, the psychological side of it, these things, I'm going to tell you guys again, those are the things that are most important. If you don't figure those things out, it doesn't matter what kind of system you're learning. It doesn't matter that you've memorized the rules of the system. You will never be able to implement that system as you should, because all that other stuff, the emotions, the psychological side of it, is going to keep you from doing so. Okay? So, is what it is there, right? The two of y'all that contacted me, I'll be contacting y'all here this afternoon, so please look for that. And we'll figure out how you guys want to do this, how you guys want to get involved with the mentor program. And like I said, first two people to do it there get that discounted rate that I talked about at the beginning. And it looks like they might have already decided they want to do that. But you guys, if you think you still want to do that, what I was talking about at the beginning there, send me a message anyway. And if either one of them ends up backing out, then you're the next one in there, okay? All right, guys. Y'all have an amazing week. Trade safe. Hey, guys, I'll be on Thursday. I'll be on Forex Analytics. I do that every quarter. I'm a guest on there. And so if you guys want to get some more of me there, you won't see my face, but you'll hear my voice. We'll do that. And then I'll be on Scott Melker's program there on the Tuesday when he does the usually look at the charts and whatever. I think I'm going to be on there in a couple of weeks. I've also been on the Wendy O show here, guys. I'll be on the Wendy O show here coming up this Friday. Don't forget, last time I was on there, right? Before I go, real quick here, guys. Last time I was on there, where is my chart? Right here. Last time I was on there, let's kind of pull this over here, get all the clean stuff, get a nice clean chart here, right? Which was December 30th. I was talking about buying Sol down here, right? And I told them, if we were talking on there, I said, I believe that was a pretty good buy. And I said, if we break 15, we're probably going to 30. If anybody listened to me then, you're up about 150% right now. And so, I got a lot of gaff off that. I got a lot of laughing. I got a lot of stupid comments, right? But again, this is where I tell you guys, what is it that you want to do out there? Do you want to make money, or do you want to be concerned about what somebody else says? Who cares what somebody else says? Trade. Learn how to do it properly. Learn how to deal with the emotions and psychological side of it. But trade your plan. And you need a plan. You have to have a plan, guys. Okay? And you should have a logbook, kind of a journal that you keep things, that your trade information in, and your feelings and all at the time, so you can look back on it and go, man, I shouldn't have taken that trade. I wrote right here that I was feeling this way. So important, guys. These little steps that nobody wants to do. Everybody just wants to jump in and ape in and YOLO, right? And then everybody loses their money and they get upset. Oh, the market's rigged. Oh, it's against me, right? There you go. As always, remember, the only thing that you control in the market is how much you lose. Okay, guys? That's it. So keep working on that risk management. It's the most important thing you'll ever do as a trader, day in and day out. Y'all take care. If you're in Discord, I will see you guys here in a bit. We'll catch y'all on Friday, 11 a.m. Central Standard Time, all right?